Hi everyone, it's Mike from Order Flows and welcome to the Order Flow Dynamics course module number 3 on cumulative delta. So cumulative delta is the running delta total for the trading day up to a point in time, right? When you're looking at a chart up to a point in time, you're going to see the cumulative delta. Now there's two ways you can look at cumulative delta, just like max delta and min delta. You could look at it numerically, which is along the bottom on the chart with numbers, or you can look at it visually, which is along the bottom, but in candlestick form. And a lot of people actually look at it in both terms. For some people, they tend to be a bit more visual. The mind processes images at a much higher and quicker rate than numbers. And this is how it will look on a footprint chart, right? You'll see you could have the cumulative delta number right along the bottom. It'll usually appear right below the max and min delta and the delta. And you can see what it is, right? You can see at this point, this is gold. It's coming in and crosses 0 here in this big red bar. You can see 25.5, then minus 254, minus 305, minus 306. Again, it's the running total. So you're going to take, the previous cumulative delta, add or subtract what the delta is on the next bar to get your cumulative delta reading. And, again, each bar has a max and min delta, but the cumulative delta is for when the bar closes. Okay, it's not reflective of the max delta and min delta in the sense that all it's doing is it's taking the previous cumulative delta reading on the previous bar and adding or subtracting the value that comes in on the delta number for the current bar. And again, once the bar closes, it's not going to change. Now, I've seen and heard many ways that traders use the cumulative delta incorrectly. And two of the biggest glaring mistakes that I've seen is using cumulative delta to only take longs or shorts. So what I mean by that is, they'll say, well, I'll only take longs when cumulative delta is positive, or I'll only take shorts when cumulative delta is negative. And that's a big mistake, because you got to be able to trade both sides of the market no matter what cumulative delta is doing. Okay. And another way is I see people turn it basically into an oscillator, right? And what they'll do is, well, when cumulative delta crosses the 0 line from above and below rather, they get long. So the market's coming up, finally crosses the 0 long, so they get 0 line, so it gets long. Or cumulative delta crosses the 0 line from above, meaning the market's been selling off, and they get short. Now, when I say that's a misuse, think about it, right? Markets trade basically around the clock, right? They open at 5 p.m., close at 4 p.m. the next day. And if a market has been selling off all night, all overnight, and into the morning up to the cash open, you can be looking at a very big negative delta. But then if the market is going to start putting in a rally, and we're at a very strong negative delta, but you don't take any longs because, well, cumulative delta is negative, you are missing out on some great trading opportunities. Just as if the market had been rallying all night, you got a very strong positive delta, but then the market shows weakness during the day and you don't take any shorts because we're at a very high positive cumulative delta, again, you're going to be missing out on a potentially big move. Now, another point is cumulative delta, right? It's the running delta for the day. So, as you get to a certain time by like 2 o'clock, 2 p.m. Chicago time, where you basically got 2 hours left, there's not much trading time left in the day that if we're at a very strong positive or negative cumulative delta, to get it back to 0 is probably just not possible, right? It's going to take a lot of bars positive if we're at a very strong negative delta to get it back to 0. And, the opposite is true, is if we're at a very strong positive delta, it would take an awful lot of selling to get it back down to 0. So again, don't turn it into an oscillator, and don't filter yourself out of potential trade opportunities because cumulative delta is positive or negative. Now, this is an example of what I call the misuse of cumulative delta. So we're at our high here, 32.26 and a quarter. Cumulative delta is at its strongest. Okay, so how do you calculate that? Well, cumulative delta of the previous bar is 9930. The max delta I know in this bar, the high is 211. So when I add 9930 plus 20 211,9930 plus 211 is going to give me 10,141. So at its strongest in this bar, cumulative delta was 10,141. The bar turned around, some selling came in, the bar closed and had a delta of 309. So you take the 9930 minus 309, it's got a cumulative delta of 9621. But actually internally in this bar, the cumulative delta was at its highest at 10,141. And if you're misusing delta, cumulative delta, in the sense that, well, I can't take any shorts if we're at such a high level in cumulative delta on a positive note, you're going to miss this shorting opportunity, right? The next bar, cumulative delta finishes at 9227 because we had a final delta of 394. Next bar, some more selling, minus 108 delta. It brings the cumulative delta down to 9119. So what's happened in these three bars? At its highest point, it was 10,141. Where over the next three bars, cumulative delta has shed 1,000 contracts. That's a bearish sign. Okay, so again, if you're taking this stance, well, I can't take any shorts because cumulative delta is its strongest, you're missing out on a potentially great trading opportunity. So cumulative delta is called cumulative delta because it's the total of the delta up to that day, up to that point in the trading day. So think about it, right? When cumulative delta is at its most negative, in order to get back to zero, it's going to take a lot of bars with positive delta and bars with strong positive delta, right? Not just bars with, with positive delta of 20 or 30. It's going to take bars, with several hundred or even thousands of contracts to get it back to the zero line. That doesn't mean it can't be done. It happens, often during the trading week. But if you don't take buys when the market's at its lowest point, when the signs are there to get long, you're missing great trading opportunities, just like I just explained at the high on the previous chart, right? When cumulative delta is at its most positive, it's right after that point when tremendous sells can occur. And what do I mean by tremendous sells? This is that chart that I was showing you earlier, the footprint chart right here, 32.26 and a quarter. That's right here, cumulative delta, strongest point, right? We're at 10,141. By the time it gets down to the zero line, which is about an hour later, the market sold off from 26 and a quarter below 3,200. Okay, so that was the move to have. And if you're putting yourself in this box, well, I can't take shorts because cumulative delta is so high, it's so strong, I can't take it. Well, you're going to miss out on a trading opportunity of the day right here, over 20 points, 25 points right here, maybe even more. Now, cumulative delta at lows, it's the same thing, right? If you're putting yourself in that box, well, cumulative delta is so weak, it's such a strong negative number, I can't take any longs. Well, you're going to be missing this buying opportunity right here. You're going to be missing this other buying opportunity right here. Okay? You got a nice sell coming in right here off this little rally. Okay, that's a nice move, but you're going to be missing this buy. You're going to be missing this buy. Okay, don't put yourself out of the market when there's some great trading opportunities. Like I said, cumulative delta is most often positive at highs, right? Doesn't necessarily mean it's always its strongest at the highs, but generally speaking, at the highs of the day, that's when it's most positive, just as at lows of the day, it's most positive, right? You can see here, it's most positive at the high of the day, and we never came back down to zero. The zero line is way down here. This is 10,000. This is 5,000. Right? So, if you're like, well, here's the move from 74.5 down into the 50s. Okay? Yeah, you can catch the move back up because cumulative delta is above zero. You could take longs, but you're going to be missing out on this tremendous shorting opportunity. Here's cumulative delta, most negative, then begins the move up. Okay? Where is it? Down in here. This was the most negative at this point right here. Yeah, it's a great buying opportunity. All right, but again, if you're not, where market's been selling off all night. All right, we're coming in 5 in the morning, 4:30 in the morning. It's very strong negative delta. Right, by the time it gets up to the zero line, it's already 1 o'clock in the afternoon. right? How much time is left for you to trade, right? So this is the move to be taken. If you're getting long from, the 38.60, 38.70, 38.80 area, all the way up into the 40s, that's the move that you want to be taking advantage of. But if you put yourself in the situation, well, I can't take longs because cumulative delta is negative, you're going to miss those opportunities. But I'm going to show you how you can take advantage of that later. Cumulative delta, most negative down here, all right? Then it begins its move up, right? It goes from its most negative to its most positive. So again, you're going to be missing your buying opportunity from the low and your selling opportunity from the high. Now, there are different ways that you can use cumulative delta as a tool for your analysis, okay? So you could draw support and resistance levels, there's divergences, and you can recognize when the market is exhibiting strength or is it showing weakness. Now, this is an interesting cumulative delta. We're at our low of the day. Cumulative delta is just turned positive. Okay, it closed positive on this bar at the low of the day. What's that telling you? That it's telling you that the market is, getting ready to take off. Now, I know I said, you shouldn't wait until cumulative delta crosses the zero line, but this was a unique instance that the market had positive delta, even though we're selling off, because we're at a higher level earlier, so the market was much higher. There was buying overnight. Market came down, turned negative delta, right? But only small, a very short period of time for about 30 minutes, and then it's turning positive again, right? So it's what's happening. It's rejecting, these lower prices that you see in there, right? It's finally seeing the buying right up off this low, right? You had a low here earlier at 12.55. Delta was negative, right? Again, like I said, a lot of people say, well, cumulative delta is negative. All right, I gotta get short, all right? But, that's not the way to trade cumulative delta. When you're at your low of the day and you see cumulative delta is still positive, that's a good buying opportunity, okay? It's not something that happens very often, but I put that chart in there because I want you to realize that it's actually, how to say it, when you see something that doesn't make sense in the market, it's often time to go with the thing that doesn't make sense, right? Because you're at your low of the day, you should be having a nice big negative delta, but buying has already appeared in the bar before it, right? We came into the low, made a new low, but the next bar still, it did turn positive delta briefly in this bar, but then this next bar turned positive delta. And you can be getting long in this next bar here. This is a 5-minute chart. You can be getting long in here, anywhere between 80 and 76, 74. It opened up at 78 or 79, traded all the way down to 74. It's plenty of time for you to be taken along. Where would you be placing your short? You're getting long in here at 77, 76. The low of this bar is like, 71. Your stop is just below there, all right? Market has been showing strength all night. You get that big deep pullback, still strong. Get ready for the market to continue back in that direction. Now, drawing support and resistance on cumulative delta. Okay, this gets a little tricky for some people because they don't like to draw trend lines or mess up their chart, but you could use cumulative delta the way you would use price in a sense. So, for example, the lower chart is the delta, cumulative delta in the form of candles. Now, if you're going to be drawing trend lines, it's best to use, cumulative delta in a candlestick form so you can chart it. Okay, so you can see, right, you have this nice trend line coming across in here. Finally, the market sort of comes back up as price is going back up and takes out those highs. Drawing trend lines, some people like to draw them from the wick, some people draw them from the bodies, but you can see here, right, this top line here corresponds in here. So you can see as you're breaking this trend line right in here, you can be getting short before it sells off in terms of delta from minus 5,000 all the way down to minus 10,000. Now again, the market went from this is in here around the 59 area. It did trade all the way back up to 61 before falling over. But again, even though price is ticking higher on the chart, as long as cumulative delta is ticking lower, that's still bearish. Trend lines, again, you draw your trend line down, it breaks it, comes back up, and then again, in this case, you're sort of turning. It's coming up right around the zero line in this example again. So you could be getting in, before everybody that's saying, well, cumulative delta finally turned positive, I can get long. You could be getting in a little bit earlier ahead of them. Now, cumulative delta shows distribution and accumulation, right? And you got to be asking, where are traders going to distribute and accumulate? It's going to be areas that can move size without necessarily moving the market. And that's where cumulative delta, in my opinion, really sort of shines as a tool. So it's one thing, a lot of traders will look at the final delta number and see small deltas. Okay, 19, 69, 26. I'll say, well, yeah, you got some distribution going on up here. We're at our high of the day. We got some small deltas. That's distribution. Now, you'll notice what's been happening with cumulative delta earlier. All right, you got that big move up here, right? Well, this is right when the cash opens, so more volume is coming in. So obviously, delta is going to pop. But you've been slowly making these new highs. Delta has been going down. Cumulative delta has been going down. Then it gets in this area, and you're trading small deltas. Right? You could just see the candles are much smaller. All right, so you're at your high, and people are actively trading with each other, and they're perfectly matched more or less. Buys and sells are pretty equal. So what do you think the market's going to do? Well, can it go back up? I mean, people could be happily trading with each other, then aggressive buying come in. Or people could be trading with each other, and then more aggressive selling could take over. In this case, the more aggressive selling took over. But honestly, as you're looking at the deltas up here, the fact that it sort of dropped already from 3,000 to 2,000, it gave up 1,000, that's bearish, right? You got to be looking at when you hit your high, what's cumulative delta? Then you hit a new high, you should be having higher cumulative delta, not a smaller cumulative delta. And at this point, you've only got 3,000 cumulative delta, but you gave up literally a third of that here, 2,200, 2,100, right, before the big sell-off. So where's your buyers, right? You're making the new high, but where's your aggressive buyers, right? If you expect this market to be going higher, cumulative delta should be at 4,000, not at 2,000. It's showing market weakness, right? It's showing lack of aggressive buying, and it's showing a strong presence of aggressive selling. Now, divergence in the cumulative delta is interesting. So, market's going higher, cumulative delta going lower means there's resting liquidity generally supporting the market. Sellers are actively selling into resting bids, yet the market is not moving lower, right? Remember, if a market is going up, right, what do you normally see? Right, you normally see cumulative delta increasing. But if a market is going up and you see cumulative delta going down, well, there's aggressive selling, but who is it selling? Who are they selling to? They're selling to passive buyers that are there absorbing all that selling. Right? Eventually, when someone's accumulating a position, right, they're just sitting on the bid. That's how you accumulate. You just buy it. If you ever watch the show The Pickers, right? The guys, they go to the farmhouse out in the country, and the guy that's invited them says, "Oh yeah, my dad used to collect stuff for 50 years, so he's got all this stuff." Well, he's been accumulating stuff. He's just buying it whenever he sees it. When he sees the buying opportunity, he goes to the flea market. Oh yeah, I like that. I'll buy that. And he's building up his inventory. That's what these people are doing in here. They are bidding. They're working bids in the market, but there's still the aggressive sellers coming in there thinking, oh my gosh, we're at these high prices, I got to start selling. But the bidders are supporting the market. Okay. Then once the bidders have been buying all this time, the sellers, they got no more inventory to sell to the buyers. So, all of a sudden the buyers start moving up their bid to higher levels. They start lifting a few offers. Cumulative delta starts rallying a little bit, And finally, cumulative, the price shoots up $1. But by this time, all these guys that were happy to buy in here, right, the cumulative delta, because how does delta become negative? You have aggressive sellers selling into buyers, but these guys are supporting that market, right? They're buying, they're happily buying without moving the market. They're happy to buy it at this price because they think, we're going up to $40. And then the market pops all the way up another $1, over the next hour. But they're happy to get long in here. Then you see the big selling coming in up here. All these people that were buying in here, yeah, that's great. I made $1. I can get out now. So, be wary when the market is not moving, right? You're going higher. The market, you see negative delta, the market's not selling off, right? I showed you earlier you're at a high and the market was selling off in the cumulative delta here, right? Cumulative delta was going down as the market was going higher. In this case, the market was sort of selling off, but it's bottoming here. It's a bottoming formation up near the top, right? The market can't go, it's not going any lower. Whereas here, the market keeps going down, down, down as the aggressive selling is coming in the cumulative delta. But here, the market's not really going anywhere. It's just going sideways in here, right? Before it pops up and puts in that dollar move. Now, cumulative delta divergence buying, is when price makes a lower low, but cumulative delta does not, right? This suggests that institutional accumulation has been taking place between the price lows. Even though the market is making a new low, overall there has been consistent buying during this period of weakness. So for example, cumulative delta is going up. All right, so you get some selling going on price is going down, but there's been some aggressive buying spurts coming in here. Cumulative delta, you're at your most negative point here, most negative point, or not, second most negative point here, third here. Price spikes down here, you got this new low, but cumulative delta is still on the upswing, right? This is a divergence. This is a great buying opportunity here. You could have bought this divergence right here, right? Well, it's not really a divergence, but it's sort of this pullback, and cumulative delta pulls back. Another case, price makes the new low, cumulative delta is not making that low, right? And what happens? Cumulative delta takes over, market makes a new high. Now, the opposite is cumulative delta selling, right? Is when price rallies to a new high, but cumulative delta fails to make a new high. Expect to see a decline coming, okay? So, cumulative delta doesn't match the high of price. Price makes the new high. What happens? The market sells off. Eventually we come back up here and make a new high both in price and delta. But you had this nice sell here from, the 42 area down into the mid 30s, right before it turns around and makes that new high. It's another example, crude oil. Again, you got your new high in price, but you got a lower high in cumulative delta. And the market sells off from, the 20s all the way below 37.90 here as cumulative delta continues on its move down. Where was I? Okay, that was that one. Now, recognizing strength and weakness through cumulative delta, right? So, cumulative delta, you're going to be able to see pulses of strong negative delta in a weak market or pulses of strong positive delta in a strong market. Okay, so recognizing weakness through the cumulative delta. Okay, so here's a market. All right, this is E-minis. This is a 1-minute chart. Market is slowly grinding its way down in terms of cumulative delta. But on its way down, you see one big pulse here, a big strong negative delta, kind of small. Another big pulse here, another big pulse, another big pulse, another big pulse. What that's telling you is there's somebody who's got a lot to sell, and they're trying to move it without necessarily moving the markets, but unfortunately the market is going in the same direction they need to move their size. So they got to push some out all at once. Let the market try and come back a bit. All right. You can see on this pulse here, the market came back a little bit, so they're able to push some more. Okay. Market sold off. I gotta get some more. Well, market came back after their further push. So, this is a sign of a market that's weak. If a market is trending down and you see sort of these bursts in cumulative delta on the way down, right? Because you're seeing these normal bars. This is probably like 200, 300 each bar here. Then you get a delta of minus 800 where it just jumps down to a new level, jumps down to a new level, jumps down to a new level. That is a sign of market weakness. Had the market been rallying, right, this would be the opposite. These would be big green bars, right? It would sort of be grinding higher than a big green bar up, right? But what you're seeing is a weak market and bursts of selling coming into the market. Now, recognizing the strength in the cumulative delta, look at this market, right? The market had been trending down, down, down in price and in cumulative delta. Then within 1, 2, 3.5 bars, it gained it all back, right? You can see, well, yeah, I got a big green bar here, I got a big green bar here. But when you're at your most negative cumulative delta, then you get 1, 2, 3 big pulses of positive delta, and cumulative delta jumps and basically eats back all this cumulative delta that had happened earlier. Forget that this is the zero line. Even if this was minus 10,000 here, but we just got back all this cumulative delta in the last half hour in 3 bars, that would be bullish, right? This is how it played out, right? This was that low, and you can see the market went up from, obviously wasn't the greatest rally. This is only from, the 67 area all the way up into the low 70s, so about 5 points. But really, you can see the big sign how we just got that big pulse up, right? This is a sign of a market that's going higher. Pulse up, pulse here, another pulse here, another pulse here. So even if you're miss this move up here, right, and you start going sideways, you see this big pulse in this bar, you can get long here, 67, right? Even if you missed, again, you missed those trades earlier, you got that pulse there, it's going higher. Another big pulse here, okay. You could buy it around 68 area, 67 area still. Another big pulse here as the market keeps working its way higher. So realize that signs of strength or signs of weakness do not always disappear so quickly, right? It can still be there as the market trades sideways over a period of time. But if you've identified market weakness going into the high and the market still manages to make a new high, but the high is made on low volume, right? Low delta. The chances are that this high is probably going to hold and the market's not going to go much higher and probably reverse. Right? Remember, right? Markets reach highs on strength, right? But eventually that strength reaches its strongest point and begins to weaken. Not in the sense of immediately turning weak, but the move starts laboring, right? The strength that once was there, strength that was propelling the market to new highs is no longer there. The same is true with lows. The cumulative delta is often at its most negative point at the low, and that's where the market can turn. Cumulative delta helps you see when a move has lost its strength either to the upside or to the downside. And again, you can see how cumulative delta is starting to get stronger as the market starts to rally. Again, I was talking about the pulses here. And often cumulative delta is at its most negative at the lows, or cumulative delta is at its most positive near the highs. But if you see signs in the order flow beyond cumulative delta that this is a buying opportunity, by all means, buy it as close to the low as possible. That's what's going to give you the best trading opportunity. So hopefully by now you can understand cumulative delta a bit more and how to use it in your trading. So this concludes module number 3. In module 4, we'll be discussing trading the vertical versus the horizontal in the market. So I'll see you on module number 4.